So how is everybody? Good? Cool. It's amazing how quickly the semester goes by, you know? We're really on one of the last lectures that I'm going to do for the semester. Then we're going to have some guest lecturers come in, and we'll still be working on the projects, but it's interesting how far we've gotten on the lectures already. So let me open up the syllabus here quick. So this week, I'm going to actually talk about both accounting and financial analysis and capital and resource acquisition today. Then next week, we're going to have a guest lecturer talking specifically about capital and resource acquisition. I wanted to have an expert come in and talk to you guys about how to acquire capital or investment for your firms. That's not the subject that I'm an expert at, and I wanted to have an expert come in and talk to you about it. So next week we're going to have an expert come in and talk about capital and resource acquisition. Then the week after that, I'll do some review sessions. A review session for the test of learning retention that's due by the end of the semester in here, and also a review of what I want you guys to still do for your LinkedIn profiles and your professional development plans. And then we'll basically have a couple of weeks of guest lectures, and then Thanksgiving, more guest lectures, and a course wrap-up, and that'll be it. So today is really the last content lecture that I've got to do for you guys, and it's partially on accounting and financial analysis, and partially on capital and resource acquisition. And then, like I said, next week we'll have a guest speaker on capital and resource acquisition. So that's that, and each week we'll continue working on the projects on Thursday as well. So that's that. Let me open up the right presentation here.
When do you expect the changes that you said about LinkedIn for your files?
What's that?
When do you expect the changes done, the ones from our LinkedIn?
When do I expect you to do them?
Yeah. Well, I mean, we turned it to you, but you haven't sent it back to me.
No, I haven't sent it back to you yet. I'm going to go over it in class 2 weeks from now.
Oh, okay.
Like, it's impossible, workload-wise, it's impossible for me to go through and make detailed comments on each LinkedIn profile. So I'm going to talk in class about what I want you to do. Okay? Okay, so slideshow for today, accounting and financial analysis. So the first topic I've got in these slides is a little bit on collecting money. I was really shocked when I started my second business just how easy it is. I was worried, like, what am I going to do when people actually say yes and they want to give me money? It was daunting, but it's really quite easy to collect money from people, especially using PayPal these days. So for client payments up to a few $1,000s per transaction, you can use PayPal without any credit approval process whatsoever. It takes about 10 minutes to set up maximum on your web page, and you'll have a little button that people can click on, pay you with a credit card, and PayPal will run the transaction for you, and you can transfer the money from your PayPal account to your bank account. So very easy to get started doing that. How many people in here have like collected credit card payments from PayPal before? Okay, so Jennifer.
Charlie.
Charlie, yes. Sorry, Matt. Normally, I make a map of everybody's faces in the class, and I haven't done that yet this semester. I usually take everybody's ID picture and put it on a piece of paper so I can remember who's who. I still need to do that. Sorry. It's really very easy to do on PayPal. So I've given you a link here to PayPal to go in and be able to download the link that you need to put on your website in order to collect payments. In addition to PayPal, businesses or individual entrepreneurs that have decent credit ratings can also get larger transactions through PayPal, as well as through other more robust credit card vendors like TSYS, Merchant Warehouse, and Advanced Payment Solutions. So those guys tend to be cheaper than PayPal. PayPal is pretty much the most expensive way that you can collect money, but it's also the easiest and the one where you don't have to have any credit rating or any particular qualifications in order to be able to collect money. Yes, Jennifer.
If you gift it, they don't charge a fee. If you gift the money to someone, or if you just request that they gift it to you, instead of just sending it, they don't charge a fee.
I didn't realize that.
Yeah,
However,
I always ask my clients to gift it to me because I'm like, either you have to pay an extra 25% or whatever, or you can gift it.
I think, yes, that's true. When you get past a certain size in your business, it becomes problematic to continue having everybody gift stuff all the time.
Yeah.
But when it's small, it's doable. So the basic deal with each of these vendors is that they take a certain percentage of your revenues, and in exchange for that, they provide you with the service of accepting credit cards. So PayPal is the easiest way, but it's also the most expensive. I've listed some of these various vendors here. PayPal basically takes 2.9% or 3.9% for international transactions. You can accept payments up to $1,000 or $2,000 as well without having to have any kind of credit approval for yourself. So that's PayPal. Intuit Payment Network is also a similar vendor to PayPal. It has really good integration with Quicken and QuickBooks. And then some of the credit card vendors out there that do this stuff, TSYS, Merchant Warehouse, and Advanced Payment Solutions. I've given you some comments about each of them here on the right-hand side. So as you get bigger and your credit rating is better, you can use these other vendors. They're cheaper and give you more. They give you more robust solutions as well. The next thing I want to talk about is revenue and cost estimates. I'm not satisfied right now with the way that I'm teaching accounting for this class. I'd like to do a lot more than what we're doing right now, and I don't really have an exercise set up for you guys yet to do accounting the way I want to do it. But the big message that I want to send when it comes to accounting and financial analysis for small businesses, that it's a pretty simple message, but it's really important to keep in mind. Always underestimate your revenues and overestimate your costs. One of the biggest problems that all small businesses, all startups have is that revenues are too low and expenses are too high, and that's not a good way to stay in business when your expenses are higher than your revenues. So whatever you think your revenues are going to be, just realize that they're probably going to be a fraction of that. Whatever you think your expenses are going to be, realize that they're probably going to be a multiple of that. Also realize that the business will consume almost all of its own revenue, so basically it's not going to pay you a salary when you first start. The business is going to barely break even by itself without paying you a salary. So important to remember that 18-month period that I had told you guys about starting at the beginning of the class. If you've got 18 months when you can go without having any salary or income, then that's a pretty good time frame in order to be able to get a startup up and running. If you don't have that much time, then you need to find some other way to bring in income to pay your bills besides your company. And then finally, the company's going to consume pretty much every penny that you can beg, borrow, or steal. So you need to think ahead about your capital acquisition plan and really have a good idea of how much capital you need. And it's better to overestimate how much capital you need than to underestimate it. So for revenue and cost estimates, the first thing you want to ask yourself is what are customers reasonably willing to pay? To determine that, it kind of builds on your customer vignettes and product service vignettes that you put together for the guerrilla marketing. You're going to estimate revenues based on your customer acquisition goals and the price charged in the product, the price point and the price point and the price purchase frequency that are indicated in your customer vignette is the number that you're going to use to spin up and create your revenue estimates. The question to ask yourself when you're doing revenue estimates are, do you have enough product service vignettes? We didn't talk too much about product service vignettes, but it's similar to a customer vignette, except it's a profile of a particular product or service that you're selling. And when you get into guerrilla marketing, one of the big things to remember about guerrilla marketing is that people's attention span is really short. So you might get somebody's attention for 5 or 10 seconds, and that's all the time you've got to get your message across. So you may have 20 or 50 different products that are cool, but you've only got time to talk about one in the amount of time that people's attention span lasts for your advertising. So you got to pick which product you're going to lead with in your sales, and then that's what you do a product service vignette on. So one of the questions to ask yourself when you're doing revenue estimates is, do you have enough products, distinct product services that you're focusing on? Are your customer acquisition goals high enough? So, it's a difficult balance to strike, because on the one hand, you want to be very conservative about the number of customers that you're going to acquire, because they don't just grow on trees. It's hard to acquire new customers. What we're going to end up doing in here for each of your projects is doing outreach with about 10 contacts for word of mouth and 10 contacts for social media for each member of the group. And you'll find that you can go through 10 contacts pretty quick and nobody necessarily said yes and bought anything. So you want to be realistic about how many you're going to acquire, but then you also have to be realistic about what revenue do you need to bring in order for the company to survive. So you may not know how you're going to find 20 customers or 50 customers or however many it is that you need, but if that's the break-even point, then you need to realize that that's the case and plan your marketing accordingly so that you can get the number of customers that you need. So that's the kind of the questions to think about when you're doing revenue estimates. When you're doing expense estimates, I basically recommend that you think of all the possible things you could possibly spend money on. It's a brainstorming exercise. It's particularly good to do with expert advice contacts to really do a brain dump from them of all the different costs that they had to do over the course of running their businesses. Some of the costs that you may need to think about: variable costs, so raw materials. I put including transportation if relevant. So depending on what your business is, you gotta get your product from point A to point B. So don't forget about the transport costs of actually getting it to where it needs to go, depending on what your product or service is. Labor, including payroll taxes and benefits. So remember, when you hire people, you've got to pay payroll taxes on those people. And if you want to have satisfied, happy, long-term employees, you need to also offer benefits. So those all cost extra, in addition to whatever the basic salary is that you were planning on paying, etc. Basically. And an important question to ask here is also, what quantity do you have to buy things in? So you may find that you only need, if we take Bear threads as an example, when you finally get better relationships with suppliers, you may find that you can't just buy like 1.5 yards of fabric. You have to buy 500 yards of fabric. So it's important to realize what the units are that you buy things in for your raw materials, because sometimes they're a lot bigger than you realize. Something to think about for your variable costs. Marketing costs, brand development, advertising, and networking. And I put in here including meals, expenses, and transportation. Depending on what your product is, depending on what the product or service is, you may end up doing a lot of schmoozing with people in order to get deals done, get new customers, get new partners and suppliers. All of that is a drain on your finances. You're going to end up spending money on food, on drinks, on driving back and forth to meet with people, on appetizers. Like it adds up quick when you're out schmoozing with people. So don't underestimate how much you're going to need to spend on networking costs. Overhead costs could be office space, utilities, telecom and internet, information systems, including your hardware and your software, product development, training and development, IT services, accounting services, legal services. All of these things cost money, and you need to plan on all of them in your expense estimates for the company. So a lot of times when you're sitting down and planning the financials for the firm, you sort of think about, well, we're gonna have 10 customers and they're each going to pay this much money, and we're gonna have like office rent, and we're going to have the cost of the food that we sell if it's a restaurant, or a bakery, for example. But you forget about all the other things that also are going to cost money. So remember, all of these overhead costs need to be accounted for in your cost estimates. And what that basically means is that the company is going to end up costing way more than it brings in the first 1.5 years or 2 years of operations. So that's, in order to get enough investment money, in order to make your business succeed, you need to plan on all these costs that you're going to have over the first 18 months, because you're not going to have any revenues coming in to cover them. Executive compensation as well. So at the beginning, executive compensation is going to be nothing, but if your business is ever going to be a business that supports you and is thriving, then eventually it needs to pay you a salary, and it needs to pay a salary to the other top members of the team. So think about how much profit you need to make in order to be able to pay yourself and other key leaders of the company a decent salary. I've listed a couple of revenue and cost planning tools here. There's an Excel template that I've listed on. I've given you guys on Blackboard here. Where am I? That's weird. I think my my spreadsheet's not in here. But anyway, I've listed some other spreadsheet tools for you here for financial planning: a 3-year cash flow prediction sheet, 12 months cash flow, financial history and ratios, startup expenses. SCORE, this group here, is short for the Service Corps of Retired Executives. It's basically retired former executives that donate their time to consult to small businesses, and they've got a lot of great financial planning tools on their website to use for small business financial planning. So I have given you guys a link to some of those here. All kinds of different templates that you can use for financial planning. Our Small Business Development Center also has some nice webinars that they do on various topics related to all kinds of topics related to small business, including some good webinars on accounting and financial analysis for small businesses. And then Google is also a good source of additional tools. I want to talk a bit about ratio analysis. There's 4 main types of financial ratios that 90% of the world deals with on a regular basis. And these ratios are important for a reality check of whether your estimates for your costs and expenses of your business are in the ballpark or not. There's profitability measures, liquidity measures, leverage measures, and activity measures. 4 different types of financial ratios. Profitability measures basically are important for understanding a company's business model. Liquidity measures tell you how well a company is able to pay its bills. Leverage measures tell you about the hard value of the company versus the debt leveraged value. And activity measures tell you about how much cash flows in and out of the company. So all of these basically give you a reality check against your peers in the industry to see whether your costs match up with whether your costs and revenue estimates match up with the standard type of business in your industry. A couple of the main ratios that you should know how to calculate are gross and operating profit margin. So that's sales minus cost of goods sold divided by sales for gross margin, and sales minus operating expenses divided by sales for operating profit margin. Current ratio is a really common ratio, that's your current assets divided by current liabilities. Long-term debt to equity ratio is your long-term debt divided by total stockholders' equity. Average collection period is your accounts receivable divided by the quantity total sales over 365. If the only ratio you know how to calculate, if you're not a finance person, you're not a numbers person, if the only ratio you know how to calculate are the ones on this page, then you at least have the basics of what you need to know to compare your company with other companies and other small businesses and see whether you're in reality with your cost estimates. So that is how you estimate these. This is how you calculate these ratios for your own company, and then there's lots of other ratios that are interesting, important too. I've given you a couple of links for BBT and demonstrating value. Both of these sites have dozens and dozens and dozens of other financial ratios that are interesting additional information for your company. The basic ratios that you need to know are the ones on this page. If you're interested in doing more financial analysis of your company, then the ratios at the bottom of this page are useful. There's two data sources to be able to figure out what the ratios should be for your industry. One is a hard copy book or set of books that are in the library. It's called the RMA Annual Statement Studies Guide. It's in the library's reference collection. This is the reference number that I've listed for you here. The other way, even more simple, is to go to First Research Industry Profiles. So if you click on this link here in the slides, that'll open up First Research. And if we take M&D Barbershop, for example, I'm going to put in barber. Hair care services, pretty close. So August 2017, that's pretty recent. So we open this thing up. So you're going to need to type in the name of your industry. And you may have to play around a little bit with the name to get the right report for yourself. But once you find the right report, if you scroll all the way down to the bottom of this report, you'll see financial information towards the bottom of the report. And among other things, you've got ratios in here for what net sales are supposed to be, what gross margin is supposed to be, what your advertising and sales expense should be, what your overhead should be, what the current ratio should be in a normal company like this. So in order to compare your company with whether you're in reality or not, you're going to calculate these ratios for your own company and then go to First Research Industry Profiles and take a look at whether your profiles, your percentages for these calculations are the same as what's in this document. If they're not the same, hang on one second, Jennifer. If they're not the same, then there's probably something that you've left out in your expense calculations. Yes?
So for the first industry research profile, is it just, it's just the industry, you can't find their actual, like there aren't actual companies listed on there, it's just an industry?
It's just for the industry, not for companies.
And where was the link to this again? In their PowerPoint?
It's in a couple of different PowerPoints. So today, it's in the PowerPoint that's called Accounting and Financial Analysis.
Yeah. Because I tried to find it like on my own, and it said to get to for it.
Yeah, you have to get to it through our library.
Okay.
So I responded to your email. You may not have seen it yet,
Okay.
but basically, you have to go to the library. If you either click on the link that I have in here, or you go to cSUB.edu and click on library. And then where it says database list, click that. Databases by title. And just go to the letter F for first research. And you can access it through there. If you go to first research, just like the regular web page, it'll ask you for user information and try to charge you money. We've got a subscription through Cal State, so you have to use our library in order to get to it.
Okay, that's what I thought. I just
Make sense?
couldn't find it. Yeah.
Okay, no problem. Okay, so getting back to the presentation here. So that's the source that you're going to use to find the ratios to compare to the ones you've calculated for your company. So that's the short presentation that I have on accounting and financial analysis in small business. I'll go to the capital acquisition in a second, but one last comment about accounting and financial analysis for small business. QuickBooks. How many people in here are familiar with QuickBooks? Okay, not more than a couple. QuickBooks is a really common software package that's used to do accounting in small businesses. So what I'd like to do in a future version of this class is do like a whole class session on how to use QuickBooks. I think it'd be really useful for you guys, but I haven't developed that yet. So this is my basic pitch on accounting and financial analysis. I leave you with the thought that QuickBooks is a key software package that is good to learn skills of in small business management as well. So that's that presentation. Go back to course documents and open up capital and resource acquisition. So this is, we're going to have an expert, like I said, we're going to have an expert come in and talk next week about really where the rubber meets the road in how to get money for small businesses here in Kern County. He'll talk a lot more about small business lenders, about angel investors. He'll talk about a lot of different stuff that I think is much more relevant for how to actually get capital for a small business in Bakersfield here. I will give you a presentation today at a little bit higher level on the general topic of investor and resource acquisition. So there's three sort of easy ways. There's three cheap ways to get capital. Easy and or cheap ways to get capital for your small business. One of the biggest ones that everybody uses when they first get started is credit cards and lines of credit. So when I started both of my companies, I ran up my credit cards. I got lines of credit at the bank, used those to pay for things. That's usually the way that most small businesses get started, is by using lines of credit and credit cards. Obviously, you need to be cognizant of when you're going to bring in revenues. Otherwise, it's a good way to go bankrupt by running up large debts and not having a way to pay them. But the easiest way to get access to capital for most small businesses is your personal credit cards and or personal line of credit. Bank debt is a second relatively inexpensive source of capital. The problem with bank debt is that you're not going to be able to get it until you're up and running. So if you've got a business which is just starting, doesn't have, like, until you've been in business for 2 or 3 years, it's going to be hard to get bank debt unless you have assets, collateral that you can put up personally. to guarantee the loan. Most bank debts are guaranteed against the assets of the business. So once you've made profits and the business has some profit in the bank, and it has cash in the bank, and it has computers and tables and stuff that you've bought for the company. Maybe you have inventory that you've developed, inventory of hats. Those are all things that can be liquidated into cash. So the assets of the business usually guarantee a bank loan. If you don't have any assets of the business, it's hard to get a bank loan. You also have to provide financial statements for your business. So if you haven't been in business for a couple of years, you have no financial statements to prepare. Financial statements get prepared each year at the end of the year, so you need a couple of years worth of financial statements in order to be able to get a bank loan. And then finally, you need a business plan, which is the sum of all of the different things that we talk about developing in this class. It's a longer document where you put everything together in one large document. A nice source of money, which a lot of people underestimate, which is also something that you can get at right when you start the business, are grants. So government grants, not-for-profit grants, are a great way to get money for free. The cool thing about grants is you don't have to repay them. You just get, it's free money. The problem with grants is there's a lot of paperwork that you have to fill out in order to be able to get the grant. There's always very, very specific eligibility criteria. So, if you go to grants. There's a website called grants.gov that covers a lot of. Grants.gov is the federal website for grants. I'll get into some of these a little bit more in future slides. There's another one. I can't remember the name of the website, but there's a nice website for all kinds of different grants that you can apply for all around the world. I'll show you a picture of it later, a link to it later. There's very rarely that you'll see like a grant for small barbershops. It doesn't exist. You might find one for green communities. So if you can think of a way that your barbershop does innovative recycling or something, you can get grants that are focused towards other things. So you need to kind of keep an open mind about how to pitch your business so that it fits the eligibility criteria of the grant. And then finally, there's a lot of bureaucracy that you have to go through in order to get a grant. So it's a pain in the butt, but the nice thing is it's free money. And if you can get it, you don't have to pay it back. And sometimes these grants can be pretty sizable. So good source of capital for getting the business started. Crowdfunding is something that I sometimes talk about more in this class. I don't have a lot of crowdfunding planned for this semester, but it's basically, think of it as a guerrilla marketing campaign where you're selling a mix of your normal products and services at promotional prices together with giveaways in exchange for donations. So basically, you're selling your products at higher than normal prices, and the extra money that comes in from the sale of the products is capital that you can use for your business. A lot of times, in addition to your products and services, there will be gimmicks and giveaways, like for a $10 investment, you get a personal email from me saying thank you. For a $50 investment, you get a sticker that says I'm part of the Home Bear Threads team. it's a combination of selling your products at inflated prices and giving away giveaways in exchange for donations. Very important to make a project plan before you start a crowdfunding project. Make sure that your fulfillment and outreach are in place before the campaign starts. So once people start saying yes and donating, you need to be able to deliver on whatever you promised them, like that. And you need to make sure that you're actually reaching out to people and contacting a sort of critical mass of people right at the beginning of the campaign. If you don't get a critical mass of people going at the beginning of the campaign, it just sort of sputters and you never really get started with the campaign. So whatever your total capital goal is for a crowdfunding campaign, you want to target about 20% of that goal in people that you know already. So if you can think of existing contacts that you can reach out to on social media, over the phone, over text, over email, you can think of existing contacts that you know who can contribute about 20% of the campaign. That's usually the critical mass that you need for strangers to start getting interested in the project and donating and getting you up to the rest of your goal. So 20% of whatever your crowdfunding campaign goal is, you want to have already planned in contacts that you know of that you're going to reach out to. Some good information sources about crowdfunding, in addition to what I've said here, are these links here. CrowdCrux, entrepreneur.com has a nice page on crowdfunding, and then there's also some webinars that our Small Business Development Center has done on crowdfunding. There's two different kinds of crowdfunding, equity and non-equity. The type of crowdfunding that I just described to you, with donations and selling of your products at inflated prices, that's non-equity crowdfunding. That's stuff like Kickstarter, GoFundMe, Indiegogo. There's probably 20 or 30 other sites. Those are the big ones. I've listed a link here that gives you all the other crowdfunding sites as well. Here, let me open it up quick. Dum-da-dum-da-dum. So GoFundMe, Kickstarter, and Indiegogo are the big ones, but you've got a bigger list here: Teespring, Patreon, CrowdRise, Kiva. Anybody in here familiar with Kiva? Kiva started out as micro lending for developing countries. They now do crowdfunding here in the United States too. It's a cool business. But these are some more crowdfunding sites. Equity crowdfunding is where you offer small percentages of your company in exchange for donation, in exchange for investment in the company. So this is not a donation. This is actually like purchasing a percentage of your company. I have not worked very much with equity crowdfunding yet, so I'm not very familiar with how to describe everything to you guys. But there are three leading websites for crowdfunding: Angel.co, Early Shares, and Grow VC, where you can find more information. And then I've also listed another 10 top crowdfunding sites for equity crowdfunding as well. So that's all in here for your viewing pleasure. It's important to create just the same way that I focus on website development in this class so much. The same skill set that you use for developing that website, you also use for developing the crowdfunding page, which is it's sort of like your Facebook page, except it's for the Indiegogo site. And it's going to have pictures in it. It's going to have text describing the business. It's going to have buttons that have different levels of donation that you can go into. You need to be able to need to be able to create the page on the crowdfunding platform. I've listed here some of the major steps in sort of the project plan of a crowdfunding campaign. So you start out by preparing materials. There's some initial outreach that you do to friendly contacts to start sort of do customer vignettes, just like you're doing for your projects right now. Then you need to get your fulfillment set up and in place, and then you roll out to different social media platforms, Google, blogs, online. Each of those has a certain target that you're going for. So LinkedIn, for example, you want a decent crowdfunding campaign would identify 20 champions on LinkedIn, or on LinkedIn. So 20 people that you know who are going to send a recommendation out to all their contacts saying, hey, this is a great investment opportunity, you should take a look at it. You need 20 people like that who have large networks who are going to all say, hey, check out this investment opportunity. Same thing for Facebook, same thing for other social media pages, etc. Google, you want to have 100. You're gonna set up your Google AdWords campaign so that you try to get 100 visitors to your crowdfunding page. Same thing for blogs, other online stuff, meetup.com, other events. So this is kind of a standard project plan for a crowdfunding campaign. In addition to crowdfunding and those three initial sources of capital that I mentioned, credit cards, lines of credit, bank loans, and grants, there's traditional equity investors. There's three kinds of equity investors: individuals, partners or in-kind resource providers, and venture capital and angel investors. Angel investors and venture capitalists are two separate things, but it's pretty hard to access either of them. So I for the purposes of this class, I put them both in the same category of pipe dream. It's something you should shoot for, but it's not something that you should plan on in the short term. It takes time to show up on the radar of venture capitalists or angel investors. So equity investment, first of all, individuals, friends and family with personal savings of at least $10,000. So I would recommend, if you make a list of all of your friends and family, your uncles and aunts and cousins and so forth that you know, people in that list who have savings in the bank of more than, not their retirement account or their investment account, but savings, liquid money in a bank or a money market account of at least $10,000 are the targets that you want to shoot for friends and family investing in your company. Obviously, the higher the personal savings, the less risky it is for them to invest in you. So the higher, the richer the contact, the more money you can potentially get from them to invest in your company. There should be some sort of personal enjoyment of satisfaction they get out of the business as well. Usually, loving you because you're their friend or family member only goes so far. They have to have some interest in the business as well, or it's not going to be a stable relationship. In addition to individuals, partners, or in-kind investors, these are larger, more established businesses that have an interest in seeing you succeed. So a lot of times, you're like in the case of M&D Barbershop. Some of the, I'm not sure, but as an example, some of the companies that sell hair product are really big companies, like Redken and L'Oreal and things like that. They have an interest in seeing barbershops succeed. They may have a division of the company that has services and opportunities for small businesses. So partnering with larger businesses is another way to get investment for your company. And then thirdly is venture capital and angel investors. The point that I make here, venture capital and angel investment almost never happens, especially for lifestyle businesses. So if I go through the businesses in this room, M&D Barbershop is a lifestyle business. I mean, it's not a high growth business. It's something that a couple of your family members have a passion for. It has a small local customer base. Same thing for Angelica's Bakery, lifestyle business. Roadrunner Aquatics is a different kind of project, so it's not really a business per se. Noe Vier, lifestyle business. Bakersfield Heatwave, lifestyle business. Bear Threads, lifestyle business. It's very hard to get venture capital or angel investment for lifestyle businesses. Usually, angel investors and venture capitalists are looking for companies that have high growth potential. A lot of times it's in technology, sometimes pharmaceuticals, sometimes other industries. But the important thing to remember, because I wouldn't be talking about venture capital and angel investors if it weren't relevant for you guys. If it were just pie in the sky, then there's no reason to have it in a lecture for this class, because it's just teasing you with something you can't have. It's difficult to get, but you can't win if you don't play. So it's very important to have an elevator pitch, to have a one-page executive summary of your company, to have materials that you've got out there circulating with the venture capital and investment community, because you never know when somebody might find interest in you. If you keep your materials out there long enough, eventually somebody will come through and be interested. So first thing you need to develop is an executive summary with modular business plan elements available upon request. So I think, maybe not. Let me see here. Yeah, so I've got an example of an executive summary here. It says executive summary example ABC Computer Solutions. So it kind of looks like this. You've got a short paragraph for the product, short paragraph talking about customers, short paragraph talking about your marketing plan, a little bit talking about competition, very short, early estimates place year one revenues at $100,000. We expect a 10% annual growth rate, reaching $100,000 by year 5. So simple, basic numbers on your financials, basic information about your implementation plan, and that's it. It all fits on one page. Then sometimes you got a second page with your mission, vision, and goals, and your exit and harvest options. So exit options are things that involve other people investing in your business. Harvest options are things that involve you continuing to do your business as a hobby. So you want to have both of those identified and in a kind of one-page summary for investors. So that's what it would look like. Harvest options versus exit options, like I was just talking about. Capabilities and projects that don't interest other people are things that you keep and manage yourself. Those are harvest options, and sometimes you call them. I call it harvest options. A lot of people call it a hobby. So, if I look at Bear Threads, for example, I mean, Right now, it's kind of a hobby.
Oh.
And that doesn't mean, you make money on the side. A couple people buy here, buy there. Same thing for Bakersfield Heat Wave. You make a little bit of money, but it starts out as a hobby, and you maintain it as a hobby for a while until it gets big enough. So just because it's a hobby doesn't mean it doesn't generate cash. And then exit options, capabilities and projects that interest other people are things that you sell and have other people manage rather than you. And these are called exit strategies. They may or may not involve the actual exchange of cash. So it may be the case that you give a certain percentage of your company to a partner. That partner comes in and starts managing your business. So they start paying all the expenses, but they don't necessarily pay you any cash. They may come in and start assuming the monthly obligations of the business rather than having a cash transaction. But those are exit options versus harvest options. Information sources for capital acquisition. Obviously, your friends and family are the first place to start. LinkedIn, great way to find potential investors by networking to particular types of contacts that either I know or some of my network knows. Small business loans, I've given you a link here that goes to the Small Business Administration's website and gives you some information on how to apply for small business loans. Next week, our expert is going to talk all about the requirements necessary for getting small business loans. It is possible to get. It's pretty hard to get a small business loan before you've been in business for a little while, but it doesn't necessarily have to be 3 years or 5 years. Sometimes you can get it after 6 months or a year of business. It just depends on what else you have to prepare for the materials. And Jay Thompson is going to talk to us next week. Is a really great expert on that. And then Google is a great source of information on grants, on in-kind resources, on grant funding, and on investors. I've got some different information sources for grants here. In particular, grants.gov. Grants.gov is basically a website that talks about all of the federal government grants that there are out there in the world. So if we click on grants.gov, search grants. So you can see here all of the different federal grants that are available. You can search by eligibility criteria, by category. So there's just agricultural grants, just ones for business and commerce, etc. It's all in here for federal grants. Then I've got, this used to be the link for California's state website of state grants. Unfortunately, they changed the website. So you now have to go to california.gov and use the search box to find the grants page. This link is out of date. But GrantWatch, that's the website I was talking about before. GrantWatch has all kinds of different grants from all over the world. From not just from governments, but also from not-for-profits and foundations. So different sources of grant funding. Anybody who is particularly interested in surfing through GrantWatch, I have an account on GrantWatch. So if one of the other group in here is interested in looking for grants on GrantWatch, I can give you my login criteria and you can take a look. There's large, if you log in, they have longer profiles of all the details on the grant, how to apply and stuff. So that's that. information sources for investors. There's 3 main websites for angel investors and venture capitalists that I think are particularly useful. Tech Coast Angels. Anybody heard of Tech Coast Angels? Tech Coast Angels is an angel investor group based in Los Angeles. They sometimes get up to make investments in the Bakersfield area, so they're the closest angel investment group to Bakersfield here that's normally in business. There are some angels here locally in town, but they're not. Sometimes they make investments, other times they don't. So there's not a regular place to go for angel investment in Bakersfield. But Tech Coast Angels is the closest. The nice thing about the Tech Coast Angels website is it gives a really long and clear description of what they're looking for the presentation that you have to put together in order to be able to get angel investment capital. So if we wait here for a second, Tech Coast Angels, apply for funding. About us, resources. It's a great website for understanding what you need to put together in a presentation in order to be able to talk to angel investors. Angel Capital Association is basically a list of all of the angel investors in the United States. So it's like a Yellow Pages directory of all the angel investors in the United States. So you can go here to find angel groups and platforms. California, Canada, Great Lakes. See, these are all the different regions where there's angel investors. You can see here all of the different angel investment organizations in New York and the Pacific Northwest, Southeast, et cetera, et cetera. So Tech Coast Angels is one of these for Southern California. Let me see if I can find California. So Tech Coast Angels, you see here, that's just one of probably 20, 25 major angel investment groups that are all here in the state of California. Each of them have slightly different criteria for applying to have them invest in your company. But Tech Coast Angels gives a good overview of the kinds of materials that you need to put together. And then finally, fundingpost.com is sort of like a Facebook for equity investing. It's kind of a crowdfunding platform. It allows you to put together a profile of your business or your business opportunity, like a Facebook page. It's like a social media page, and investors can visit your page and assess you as a potential investment target. So, three websites that are particularly good for angel investors as well. And then networking through crowdfunding sites is another great way to get to investors. So that's it for my lecture for today. On Thursday, we're going to go through update meetings with all the groups again. And then next week, we're going to have a special guest on the nitty-gritty details of getting investment dollars for your businesses. See you guys on Thursday.